Folks, today I'm going to talk about the top momentum stocks for the next 90 days. Next 90 days is crucial because I think the markets are going to become very specific in which sectors go up and down. It's not going to be like a typical bull market where you put your money in the S&P fund and everything rises. It just won't work this way. So right now more than ever, selecting the right stock in the right sector is crucial. Markets are extremely divided, with some sectors moving higher and others moving lower. It's not the type of market where you can simply throw money at an index fund and expect double-digit growth. Those days are over, and now more than ever, you have to be extremely picky with your selection criteria. And here's something you need to understand. It's actually easier to find the best stocks during turbulent market periods than when markets are rosy. The reason is simple. When bulls are dominating the markets, pension funds and institutional traders tend to accumulate everything broadly. It gets harder to see which stocks are actually hot because all stocks are rising. But during turbulent market periods, institutional traders become increasingly selective. They become picky. This causes stocks that are hot to see strong accumulation and stocks that are lagging to meet strong selling pressure. In other words, momentum and price action become increasingly important during volatile and bearish market periods, similar to what we're seeing right now. And that brings us to our short list of top momentum stocks. These are stocks that are starting to experience strong institutional sponsorship over the next several months, maybe even weeks. And that's why you need to start following them as early as possible. The first stock on my list is Dexcom. It's a company that develops continuous glucose monitoring systems for people with diabetes. Dexcom sells glucose monitors, or CGMs, for patients with diabetes. It's the newest CGM is called G6. These devices are bringing rapid changes to the way doctors treat diabetes. Many patients are now receiving the medical device through pharmacies. This has lowered the barrier to adoption, and led to a spike in demand. On a fundamental basis, the stock has been doing very well. 5-year revenue growth is over 450%. 5-year earnings growth is over 700%. They're really doing something right. Last quarter, the stock had a 980% earnings surprise, and the top price target in the stock is $475 per share, which is substantially below the current value of the stock. Moreover, the stock has 15 strong buy recommendations, making it a hot target on Wall Street right now. In terms of momentum, the stock gained over 167% in the last 12 months, and I believe we're just starting to see accumulation in this stock. Expect price to keep moving higher as long as the company keeps generating record revenue quarter after quarter. The next stock on my list is Five9, ticker symbol FIVN. Five9 rents space in internet data centers to host its communication software. The company provides software products such as workforce management, speech recognition, and predictive dialers. If you're looking to build a virtual contact or virtual call center, this company can help you achieve your goal. The stock has been on a momentum run, returning 1,593% in the last 5 years. Revenue has been increasing over 200% in the last few years, and Five9 announced a deal with both Zoom and AT&T recently to provide live agent support to both companies. Imagine if you have Five9 software, a computer, headset, and the internet, and you've got everything needed to kick off a global customer service operation in any geographical location. That's powerful. You couldn't do that 10 years ago. The company sees more upside as a result of COVID-19 crisis, prompting more companies to explore a shift to cloud-based software. And even without the outbreak, there was a strong shift into the cloud, which is only speeding up now. I really like these two stocks, and I believe they're going to gain a lot of momentum in the near term, which is the next quarter. Hope that helps.